Of the London Session Open. Today is January 29th, 2020, and it's 2 minutes past 10 a.m. when we're doing this market update. If you do have any questions, you can just put them in the chat box. What we're going to do now, so we're going to take a look at the markets as we should do in the morning, talk a little bit of what's moving, and also talk a little bit of what may happen later today. We do have the Federal Reserve rate interest rate meeting coming up at 7 p.m. London time, and that could potentially be a market mover, even though I personally think it's not going to be. But you never know. Volatility may pick up, and we might see some big moves. So we're going to talk a bit about that and how to prepare ourselves for that. Now, if you're new to this market update, my name is Alejandro Zambrano, and I've been doing this market update in this sort of form, I think since 2009. Videos in the past, just recordings, not doing it live, and then we're starting to do it live a few years later. And I've been trading since 2006, and I'm a profitable trader, which many people are not. So hopefully I can transfer some of my knowledge to you, so you can hopefully become a better trader. Now, I'm going to share with you guys my view on the market, but that doesn't necessarily mean that you should go out and do all of it. In fact, you should always look at things and try to combine them with your own analysis or your own understanding. That's what a lot of people do. A lot of people that watch these presentations, they have been training for many years, they have their basic strategy, and they come here to find new ideas or just to confirm their own view. A lot of people say, well, Alex, when I am bearish and you're bearish, that's when I trade, because that will make it, that will increase the chances of being right. On the other hand, if you're bullish and I'm long and I'm bearish, then that tends to lead to less good results. So that's just one way that people use these morning updates for. Okay, right now we're looking at the euro, and we had a good little move here. So we talked about selling on the break here for this to go down. So far the market is down with about 65 pip, and we do have the rate meeting coming up, and we are resting just above the lows here. So there's nothing wrong booking the whole thing now, profits here, because we were at these levels yesterday as well. Market did not manage to trade much lower, and in some markets, I think it's the Aussie dollar, you are having a bit of resistance where the market is actually going upwards. So I'm not saying the same is going to happen in the euro, but it's quite likely that we'll have a little bit of a bounce. And if the Federal Reserve sort of makes a big fuss about the situation in China, or somehow otherwise, is perceived to be dovish, then this could easily shoot up to 110.50. Now, if you don't want to get involved in the short-term moves and stuff like that, then I would just ignore that and what I just said, because the longer-term trend does remain bearish below 111.09, which is as high, and we might go up, but I think eventually we will go down. And this is also something I discuss in the quarterly market outlook here that I did with the ATFX team. I'm gonna send you the link for that so you can check it out. It's effectively a PDF like that. So I'll send that to you and you'll have that. Let me just check. I managed to close down the video or the page here to the chat. So there you go. That's the link for that. It's free to download. Just need to be a member of the site. Now, so again, I will book profits here. Look to sell at higher levels. Alternatively, tomorrow, when the dust has settled, if the market is below 108.87, we'll probably continue the down move. Now here's the GBP versus the USD, and we made some adjustments to the entry spot yesterday. So we were pretty much trading where we are right now yesterday, and I said it's probably better to close that out with a tiny bit of profit and look to buy at low levels. The market did bounce from those levels, and we have gone up a bit. But tomorrow is going to be either a winner or a loser for the pound, because it's 50-50 if they're going to cut interest rates or not. I personally think they're going to cut interest rates, which means that I think this is going to go down. As well, if you look at euro dollar, you look at Aussie dollar, you look at New Zealand dollar, they're all weakening against the American dollar. So I personally think it's going to be difficult for the pound to withstand the pressure when everything else is declining. but it's purely just a gamble, really. It is a gamble. No one really knows exactly what's going to happen. And then you have the Fed rate meeting coming up today. But if we ignore all of those fundamentals for a few minutes, then the trend is bullish from the lows. We did bounce. We're still within that triangle. Might go up to 31 maybe today. So and then well, actually not 31. Well, eventually 131. So we might go up. And of course, if the Bank of England tomorrow decides not to cut interest rates, yeah, they will charge trading closer to 31.50. Maybe we'll probably rig out of this triangle at that point. But unfortunately, it's just pure sort of you can go to the casino and play roulette, choose the color, right? It's 50-50 really what's going to happen tomorrow, even though I personally think they probably will go ahead and cut. And it's that I like. Remember last week, the ECB turned dovish, or not turned dovish, sort of continued to be dovish, and you had a big break. Following that meeting, you got that slide, which is about 100 pip. Maybe if they turn dovish tomorrow as well, and we take out this level, then we'll end this triangle, and we'll be taking out some serious lows, with this one being the most important one. And then suddenly, you take out a trend line that goes via this level, and which should be quite significant. And if you look at this from a bigger picture perspective, it will be something very similar to what we've seen in the past. So, the true range here, let's see if we can find it. There we go. This is the true range. You can actually segment this up in a few pieces like that. But clearly, 134 is really an important level. When and if we take that out, we can go substantially higher. Until that happens, we're capped by that, and the price is effectively bouncing off here. So if we do break these levels, we might be down here at 124 at one point again, and then we'll see what happens. What will be interesting at that point as well is that this would be a head, this would be a left shoulder, and this could potentially be a right shoulder. And then maybe that is going to be what's going to propel the price higher, but we still would need to take out the 134. So if this could potentially build into a major high, and that could happen. The first sign of that happening is 129.50. Here's the dollar yen. Now the dollar yen had a little slide, a little bounce. So yesterday you had consumer confidence in the US. If I load the S&P 500, you can see here on the 30-minute chart that at 1500 hours London time, at that time the consumer confidence figures were out. The market bounced nicely on the back of that, okay? And this as well, I mean, in the very short term, there's a tiny head and shoulders, head, left and right shoulder. And you have the difference here. So we probably can go a little bit higher. And this sort of increase in risk appetite, caused the dollar yen to go upwards. 1500 hours, you get that little push, and we probably closed that gap now. Looking at this though, from a bigger picture perspective, I don't know exactly what's going to happen here because of the coronavirus situation. From a technical point of view, we can still see though, it's in this channel. This channel is very choppy. It's not easy to trade. And then maybe we'll do something like that. Maybe we can buy at low levels. There's some reports they do think from China and Hong Kong. One report said, what did it say now? 26,000 people are showing symptoms of the disease, and some 44,000 probably have the disease, but they're not showing any symptoms. So, and then there was another comment that they think over the next 10 days, we're probably going to see the peak, but in 10 days time, we're probably going to see the peak in people that are infected. And then hopefully from that, maybe we'll see lower growth. But if you look at the numbers from today compared with yesterday, the growth in numbers is about 35% so far. The reading from yesterday to the day prior to yesterday was a growth of 60%. So still having these crazy numbers, which really suggests to me we can have some much higher numbers going forward, which I think could scare the market. I don't think we're out of the woods yet with the coronavirus and how it could impact the markets. Now we did an article on this as well. This one is actually free. Let's see if I can find it. Actually, I should let me see here. This one, and we talked about it. So we did this on the 21st. You can see a little bit here how the market has been influenced on it. This is when World Health Organization issued well, actually, this is SARS, when they issued a global warning. And there's more articles coming up around this that we're going to be covering. But you can start out by reading this one. It's always good to sort of look at past examples. And then most of the time, the market does bounce back. Let's see if I can send you the link. That's the link for that. Someone wrote on Twitter yesterday. Someone wrote on Twitter yesterday. It said that the coronavirus is no match for the biggest virus on the earth, which is the humans. This is what someone wrote. Which is probably true. Us as humans, not saying that we're viruses, but as humans, we always manage to overcome. So I think we'll definitely manage to overcome this as well. Anyway, there's some risk here, and I probably wouldn't be buying just yet. Let us see if it can go lower. And here are gold prices. So gold prices, they were going up way before this whole thing breached. And then, of course, you have the situation, US Iran, things go upwards. There's going to be so many different stories to lift this, but we're still dealing with long-term consolidation and a nice break to the upside. This analysis, we talked about it already in February 2018. The market did not break out at that time. Instead, what happened is that we had a nice little rectangle and we were bearish from here. And then we were trying to capture this, and then it went up a bit. And I think we managed to capture that little section here. And then this came a little bit out of nowhere, but we did take out this level. We do have a target here of 16,000, so 1,694. And that's probably going to be met. And if you're looking at this today, a few days ago, I said, look to buy here, let it go up. Now we're back at support. This weekend, this is what people buying again, and so far it's looking really good. So there's no change to this outlook. I'll continue to be bullish, and I think we go up here higher. There's going to be something else. It's going to be the Fed cutting, maybe that recession everybody's talking about. I don't know. But it's definitely a bullish trend, and we'll continue to be bullish until proven otherwise. Now, this is the price of crude oil. And crude oil markets are slid strongly. The trend defining level is now 56.09. And as we talked about lately, I think we will probably, sorry, where we go? The market is, we talked about this yesterday as well. I think we're probably going to go up, which we did. And then maybe we'll go higher, but I think we're going to go lower at one point. And then we'll see if it creates a higher low and then does something like that. But we still tracking these highs, okay? You got one high here, you got one high here, and we'll have another high here. I'm quite confident about that. Maybe this is going to be the high, but you're looking for that, sorry. So we got down, up, down. You're looking for that stabilization. You just need to look to here, for example, sharp move down, sharp move up, sharp move down, sharp move up. When we took out this high here, that was the first indication that it was time to turn bullish. Now, I think we are somewhere here in this section here. So again, might go up a bit more, but I think eventually we'll revisit 52. And we already talked a bit about the S&P, and the S&P had that small inverse head and shoulders. Now this, I think, is better to treat this like a massive rectangle or like a massive range. So you have this limiting price and you have this down here supporting price. And we're not close to support, which is down here. Maybe from down here we'll go upwards. I would definitely not be buying here. So I think this might go up a bit more, but I think eventually it will move down lower. What else? Guys, have you been watching Bitcoins? Look at that. On fire. I was a bit nervous a few days ago. I actually loaded up. Not on Bitcoin though. I bought some other stuff like ADA. It's up with about 25% over the last few days since I bought it. I bought some Ripple as well. I think that's up with 4, so a bit boring. But cryptos is having its moments, and I think it's what it's doing. It's a bit like last year. So you got Bitcoin trading at 3,000. Well, let's call it 4,000, and then it rallied. It rallied for 90 days almost, and gained 254%. We're doing something similar here. We talked about total market cap. See if I can find that. I mean, you got this pattern by itself. You got this wedge break, and we talked about the break here going up, and it does suggest another good for this to go, and then you got total market cap. See if I can find it if it loads. Yeah, this is total market cap. So this is total valuation in of the crypto markets, which was literally around 200 billion. Now it's 250 billions, and obviously a large chunk of this is just Bitcoin. But you have the break to that, and I think we can go upwards, and then we'll see. Let's hit these targets hopefully, and then we'll see. I think if you look at it from a bigger picture perspective, and let's make this a log chart. Actually, let's unlog this because otherwise you just get. I still think we're dealing with some sort of a triangle in cryptos. Oh, that's interesting. I'm about to break that one. If we do break this massive triangle, then you're dealing with something like this. I mean, is this correct? If it is correct, then that's really awesome. Let's go back to Bitcoin. There we go. And then Bitcoin is sort of the what everybody watches. Let's see if we can load a clean chart actually. Let's do like that. Let's load the Coinbase one. So you have this triangle. So from that perspective, I think this is actually more important than the total market cap sometimes. From this perspective, we're still getting squished, which means that we might go upwards. We maybe go up to 11,500, and then we might break out. And if we do break out, it's gonna be a hell of a move like that. So you would see this going up to maybe 27,000. Now don't get too excited, guys, because we haven't reached the triangle yet. But that could be something. I think more realistically, this is gonna go up. Maybe it'll go up a bit more. Maybe it'll stop here, but I think it's gonna go up a bit more. Maybe we'll go up to here, gets rejected, and then it might just go down here, or it might go down here again, which would mean about 6,000. But then eventually, hopefully, we don't have to break to the upside, but we will. Actually, let's take that back. We could. I mean, the overall long-term trend is bullish. We will probably trade to the upside, but whenever that happens, you can have some real moves. And I said it before, I'm saying again, the utility of these things. Some people use Bitcoins, but there's so many other coins there that no one really uses. It's just for speculative purposes. So it's nothing really. I mean, a lot of these coins have been around for years. So there's highly risky. You need to know what you're doing. I bought some coins now, but the last time I bought something was actually Ripple back in last year. Because I have this idea that I believe every market will give you a very good trade idea a year or so. So I think it was here. No, this was not. Yes, 2009. I think I was trying to get involved here. Actually, I got involved in April. That did not work out. It went up, and then it went down, and then got out. It's been quite some time, so yeah, we'll see what happens. Let's see if you guys have any questions. What about Euro Swissy, and what about GBP Yen? Okay, so let's take a look at Euro Swissy, and then we'll take a look at Euro GBP Yen. Okay, so this is Euro Swissy, and I haven't looked at this for quite some time. Okay, so this is your weekly chart, and you have support down here at 106.29, and then you have some support down here at 102.37. Technically, this is a bearish trend, you can see how the market was trading within some sort of triangle pattern, and then the market breached and it actually hit that target. So it hit that target, and now the market is correcting. This is important support, so I'm not sure we're gonna break, but like many other stuff, they don't, usually the markets don't do like this, go all the way down, 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 and then go all the way up. So I guess it can go up a bit, maybe 108, maybe 108.50, and then it's gonna attack the low again. So you might say, well, let's buy. Yeah, you could buy if you wanted to, but it's usually not a good idea to buy against the trend. So I think it might go up, and then maybe here, when we start to reach these lows again, I think some people might look to sell again. You need to be very careful though. You need to understand what the Swiss franc National Bank is up to. They have in the past ruined the lives of many people, caused millions of losses for brokers and companies. They used to have it pegged at 120. And imagine you had people, this is the time when you can buy a 100K position with 500 bucks. But let's make it simple. You put $1,000 in your account, and then you put a position for 100,000. That's 100 times leverage. And then from one day to another, on the rate meeting, they decided, because they were defending this 120 level, they said, we're not going to defend it. And then this market slid with 28%. So that's 28,000 loss on a 100,000 position. And imagine you have 1,000 on your account. Suddenly you look at your account and it says negative 27. Some brokers, the one I used to work for actually, FXCM, went bankrupt on that. They had to get a bailout. And not only that, a few years earlier, here on September 2011, they said, oh, you know what, we're gonna peg it. That's when they pegged it. So for over a week, the market went up with 10%. I think that was more orderly than this slide here. Because what happened here is that everybody got super excited because they lifted up and then we went down to 120. They said, oh, the central bank is gonna defend this. So then people were buying. I remember one guy, a client of FXCM, he had some 500,000 pounds and he was buying, I don't remember exactly, I think it must have been here. He put like a 500,000 in, and then the market went upwards and he made about 3 million in total. So 250,000, no, 2.5 million pounds return on that. So there's a lot of people that were trying to do this. They would buy huge positions. And that's why you want to pay attention to what the Central Bank of Switzerland is saying, because if they do want to intervene, if they don't like the levels, because we're heading back to these extreme levels, then they might go out and say, you know, we're going to defend the level or whatever, or the price should be X, Y, Z, and they might do that. So you need to be very careful with trading the Swissy. Get a question about pound yen as well. So this is the pound yen, and this is your daily chart. So this is quite interesting, actually. I just saw this. This is quite good. So what can we do here? Well, what I do like is that we're trading within a range, a little rectangle pattern almost. You got yourself a double bottom, and tomorrow, maybe on the rate meeting, if the Bank of England cuts, it might be a slide to the downside, much like here. I'm not saying it's gonna slide like this one. Remember, we were dealing with Brexit last year. But the pattern here itself suggests about 380 pip move on the break to this level here. You got similar patterns as well in other GBP pairs. Okay, I think we're gonna wrap things up. Let's see if we have any final questions. Okay, so we covered Euro Swiss. We also covered pound yen. Guys, thank you so much for joining me this morning. Don't forget to like the video. I'll be back tomorrow, usual time at 9:30. Started a little bit later today, sorry about that. If you are watching, don't forget to hit the like button. If you just arrived, don't forget you can pull this back from the very beginning. This is me some 25 minutes ago. As well, we do have a free WhatsApp channel. The WhatsApp channel is my personal WhatsApp. So it's not directly affiliated with Investing Cube or with ATFX. And what I do is I send you my videos. So it's like my personal Twitter, except it's WhatsApp. You can click on that link, and then you will be able to, I will receive a message and I'll add you to the list. It usually take a day or two. When you do that as well, save my number as a contact on your phone. If you don't do that, then when I send messages out, you won't receive them, because WhatsApp doesn't allow anyone to send messages if the receiver has not added you as an account, to avoid spam and things like that. Okay, guys, have a great day. Don't forget to check out the analysis I just sent to you, the Q1 outlook, and as well the outlook here on that little update we did on SARS. All right, have a great day, and I'll see you guys tomorrow morning, same time. Thank you, and bye-bye. Cheers.